Hello, everybody, and welcome to another week ahead trade plans. I'm your boss, Joe Boss. Man, there is very little consensus about what the future expectations are going to be going forward, even into frankly, the month ahead. Everyone's waiting for inflation data. Everyone's waiting for growth data. But the momentum doesn't lie. And of the few people that I found talking about the change in momentum across all these different assets we'll be looking at today, the conversation tends to focus on whether or not we're going to see the positive trends over the last 1 or 2 weeks on some of these assets continue or fade. That's largely going to depend on how some of the economic data prints next week. Specifically, a lot of ISM data, PMI data next week is coming out, some inflation data, jobs data. So we actually get quite a healthy amount of information about the economy going forward. It's then just going to be a matter of, well, okay, how do you interpret that? How does that go into your trade plan? What are the type of discretionary decisions that can be made from interpreting those things? And even if you interpret those events correctly, do they actually line up with what the data actually does? How does it actually print? So, just going into this next week, we're going to go with the nominal expectations. And then next Sunday or Monday, haven't decided yet. Next Sunday or Monday, we're going to do the whole month ahead expectations. So this week is just going to be for the week ahead. And next stream is going to be for, well, yeah, next stream is going to be for the month ahead. This stream is going to be for the week ahead. And I hope you all are having a wonderful long weekend. It's a holiday for a lot of people today, so don't expect a lot of people to be hopping in. But thank God these things are recorded, right? The other thing to mention is that on Sunday, for everyone in the trading group, we're going to be doing some Outlook review. So hopefully over the rest of today and tomorrow, we'll be getting a few more pieces of commentary as far as expectations for economic events over the rest of the week. But it seems like all of the month ahead expectations that I've been receiving have been lining up with we'll see when we see the data what we actually end up doing, which frankly isn't too exciting. So, with all that said, let's get into the nominal expectations for the week ahead. Again, this is the DXY with the range probabilities on. You can see these areas highlighted in blue. These areas have the largest probability of generally for a given week. Where do you find your close? So we could go ahead and draw a line like this and say, hey, most of the time you close somewhere up here. Maybe something like this week where you have slightly lower volatility, maybe some more bearishness at the start of the week, you probably end up closing around here. But considering the expectations are for more growth and for a relatively strong labor market in the US, essentially meeting consensus expectations. One little note on the labor market in the US, apparently the commentary is that people have not been trying to lay off as many people as usual. They've been trying to keep their current base of employees more and more. So any wage gains are net wage gains, and any net employment gains are going to be net employment gains. The cycle that we had kind of at the beginning of this year of laying off a ton of people, especially in tech, seems to pretty much be mostly done. Mostly, it seems. So let's go ahead and timestamp this. Now, with that in mind, let's go ahead and update this with some seasonal data from the probability pivot points. We only have about 17 years of data here, so I'm going to go to a higher time frame and collect more data. This is now 34 years of data. It seems like for the week that we're currently heading into, yeah, this is now updating proper. What's interesting is that today's the 29th of March, but this is currently printing for the 1st of April, which is interesting. Anyways, most closes for next week are right here around the center of the pivot point. So essentially it's healing towards more sideways-ish movement. And if I bring up the ranges, you can see that's effectively flat or maybe a bit more volatility to the downside around here. But again, nominally, it's somewhere up here. And next week, if we do have the bullish move, it's probably going to be a tad more bullish. You don't frequently get your closes up here, but that would be a continuation of this trend. So any dollar bulls are probably going to be targeting 105. And as far as expectations for the dollar goes, 105 has been in pretty much every single major outlook that I've seen as like, hey, we're keeping our eye on dollar heading to 105. A lot of institutions have long trades on the dollar, essentially targeting spots just above 105. So whether or not they'll hit it next week is going to depend on the relative strength of U.S. growth and employment relative to the rest of the world. And so far, and that's where the dollar smile theory comes in, and so far that does seem to be the case, where even though the rest of the world is doing okay, is holding in there, the United States seems to be still performing better. So I'd be fine with setting this as the expectation. But now let's go ahead and check out our low odds, at least on the seasonal front. Yeah, so a lot of lows around here, or more nominally around here, just below the S1 pivot. Let's go ahead and check out our ranges. Oh, and that's for the month. Let me go ahead and manually set the time frame to a week. And you can actually see that there's a bit of overlap here, where we have a peak in our distribution, right? And where we have our largest seasonal probabilities of finding a low for the week ahead. So in a more bullish scenario, just a slight pullback to around here and then going up, up, up. That makes sense. And in a more nominal scenario, going down to here is frankly in the cards. And because that's the nominal expectation, I'll go ahead and set that as the timestamp. Now let's go ahead and check out our high odds for the dollar next week. And of course, set this to weekly ranges. Doesn't look incredibly favorable to closing up here unless you get a high that's like way up here. So I'm less certain about closing up here now. Makes more sense to have this more range bound close after looking at these high odds. So maybe we end up with a bump higher at the start of the week instead. Maybe because on Monday and Tuesday we do get some US economic data. And that could be a nice boon to the US side of things. So let's put our high expectation up there. Say we go ahead, hit a low, and then going into NFP US data here at the end, we actually see some improvement. So this is actually a more net bearish range bound like expectation going into the week ahead. Yeah, and then in the following week, next week, there's some more range bound, maybe some more slightly bullish odds. Yeah, those are some pretty far out high odds. Now, where would I start to get concerned about seeing higher highs here? Probably past this 104.8 spot. That's where I'd start to get more concerned about seeing above 105. So go ahead and timestamp that. And let's add another green arrow here for another bump up. So this would be the nominal expectation that I'm setting going into the week ahead. And this would be on the crack above essentially the mid 104.8 handle. And that's that for the dollar for the week ahead. Let's go ahead and check out Australia. Now, the yield spreads on Australia are net pretty negative. However, most of that negative yield spread comes from a lagging part of it. You can see there's all these crazy drawings and whatnot. But the yield spreads so far are mostly negative because of bad movements from up here. So if some good data comes out for Australia, maybe there's some short-term reprieve. And looking at the week ahead here, it does look like most of the time you do get that reprieve. A lot of odds around this R2 pivot next week. Let's check out our low odds. Yeah, a lot of lows pretty close to the weekly central. It does look kind of flat, fairly uniform around this spot, so let's bring up the ranges. So maybe nominally for this next week, some sort of pullback down to there. Right down to this peak, where we also see our probability weighted pivot. Go ahead and timestamp that. Now let's check out our high odds. This is going to be a little more dicey. Let's go ahead and check out our ranges. So in the more bearish scenario, or range bound scenario, getting the high around here is the best that you can do in a particularly bearish scenario. But considering we're expecting the dollar to pull back some, Aussie might do fairly well. Maybe not necessarily crack the 66 handle, but get to the high 65 part of the Aussie dollar handle. All right, let's go ahead and look at our closing odds now. And a lot of closes are up there seasonally. So it tends to be fairly sticky once you do start reaching these highs to essentially go sideways. given any week without the seasonal data, it's looking more like that. So maybe we have some fairly negative drift and we hold above in the mid 65s going into the end of the week. All right, and that's Aussie dollar for the week ahead. Let's go ahead and do New Zealand. New Zealand is not in the best of scenarios. More odds next week seasonally are around this 60 handle. Let's go ahead and check out our ranges. That's also where the highest density of closes occur for any given week using the non-seasonal data. So let's go ahead and look at our low odds here. Okay, so a lot of lows right off the bat, closer to this S1. So if there's some sort of pullback, probably down to here. And I believe that lines up with our ranges, right? Yes, it does. In fact, there's this big fat bin right there that says 11% of lows for any given week on New Zealand dollar are around this spot here. So that seems like the nominal spot to find a low for the week ahead. Now let's look at our high odds. Oh yeah, maybe it goes quite a bit higher. Let's go ahead and check out our high odds seasonally. And yeah, a lot of highs around this spot here. And then this is during particularly good weeks. You get into the higher part of the 60 handle. I'd say around here, that fits the distributions, that fits the odds. I'd call this the nominal outcome, all things considered. I really would like to see an improvement in the yield spreads, though. And again, this is a similar situation to Australia, where if the short-term yield spreads start to kick up more significantly going into the first couple of trading days next week, reaching that spot seems fairly likely. Yeah, most of the negative yield spread is coming from like way back here. So we got to watch the short-term yield spreads and see how things develop over the first few trading days of the week. Let me go ahead and timestamp these things. Essentially the same expectation as last week, but a little bit less volatility. Let's check out the Great British Pound. Effectively sideways, the yield spreads do seem to be improving in a more meaningful fashion after this huge sell-off. They're still net pretty bad, to be frank. But if we see some reprieve come in, I would expect the pound to also see some of that reprieve as well. Check out the high odds. Yeah, it's kind of split between finding your high here or here, depending on how bullish we are. Right? Either getting your high in this peak of the distribution of where you see most highs for a given week, or up here. So let's start off our drawings with the low expectations. Wow. Those are pretty flat. That becomes pretty hard to say exactly where the low is going to come in. Well, given the more sideways view that we've had this week and the slight improvement on these yield spreads, I'll be cautious going into the week ahead and just say it's a minor pullback here. So next week looks fairly risk on, at least against the US dollar in most of the FX space. But maybe it stays more or less range bound, at least on the pound side of things. Okay, let's go ahead and check out our closing odds. And yeah, it is mostly range bound for this particular week seasonally. And wow, the distribution really likes to skew negatively on the closes here. And yeah, you can actually see a lot of bearish closes for the week ahead right around here. Nominally, your closes are more or less slightly positive in the week ahead. And then you have a few scenarios here where it's incredibly bullish. But I think going with the nominal expectation based off the seasonal information is going to be the play here. Unless you do see these yield spreads flip to be more negative going into this dip here, then I would probably update my view to closing down here. Let's go ahead and actually look at that. So maybe somewhere around this 152.7 spot. I'd probably get a bit more bearish. Go ahead and set the bearish expectation down here to somewhere down there. And then a more nominal pullback into a close. Right? Oh, and yeah, you can see that's actually still right here. So maybe a bit more of a pull down, something like that. So probably until low 125s if these yield spreads continue to build up negative momentum going into the middle of the week. Euro dollar. Well, next week looks pretty darn bullish. You have a scattering of closes seasonally that are way, way down there. So let's look at the lows. Wow. A lot of lows are right around here, right? Effectively at the open. So maybe only a little bit of a pullback. Yeah. This could be a particularly good week on the euro. And the yield spreads are still pretty darn bearish. They are not looking so hot, to be frank. Yeah, these are not the best yield spreads I've seen. However, most of the long term yield spread negativity is gone. It's mostly stuff that's happened over the last week that's making the major contributions. So, probably again, by the middle of next week, we could see those yield spreads improve. So, now let's look at our high odds. Okay, that is going to be interesting. A lot of highs are considerably high up. I mean, essentially in the higher portion of 108. Sure, some of the time, roughly a little more than 25% of the time, your high for this particular week comes in below central pivot. And if these negative yield spreads accelerate, it's not going to look good. Kind of the same scenario with pound. But these are pretty good odds for at least some sort of pop. Yeah, you can even see there's a peak way up there. So the nominal expectation is to essentially rocket. I'm not exactly too sure if we're going to get this nominal expectation. We would need to see some good data come out of the Eurozone. We would need to see more consensus to flat growth out of the US. Essentially, everything just holds still and stays flat. But it might not be this might not end up holding up, but again, this is the nominal expectation, and I've been surprised more more than enough times when setting these nominal expectations to see them get met. And then we can call for some kind of pullback into the close. All right. Yeah, and that takes you roughly into where most of your closes come non-seasonally as well. So we're going to have to see how these yield spreads perform going into the week ahead. They do seem to be still shifting negative. The momentum isn't in favor of this view. But the seasonal data and the statistical data say, well, what are you going to target down here? Next week usually you don't see that. Let's go ahead and look at that low data one more time. What's down here? Yeah, there's actually something down here. I'd be willing to say just to keep things simple. Yeah. Probably below this probability weighted pivot. Call it 1075. I would be cautious of heading lower midweek. And then we can go ahead and check out our closes, right? Some sort of balance right there. Timestamp that. And look at our closing odds here. Yep, very infrequently you're getting your closes down here. This actually says it's more likely to get your close like way down here than anything else. But we'll go with the non-seasonal data on this because that looks like you need some particularly bad data for that to come in. It's a pretty high odd though. All right, let's move on to the dollar CAD, which has been gaining against the US dollar. And the yield spreads are actually in a pretty good spot. And the closing odds are also in a pretty good spot to see essentially more Canadian dollar strength, if anything. And without looking at stuff too closely quite yet, I think it's going to be an up, a down, and an up until the close. Let's go ahead and look at our high odds here. Wow, yeah, maybe a bit more higher up on this. What do the ranges say? Oh, the ranges have a bit of a mismatch. They say either going higher above this week's prior high or a bit more of an undershoot, like to around here. Well, given the things that the other assets, we'll go for this bit more of an undershoot here. And let's check our low odds. Oh, wow, those are very flat odds. This is essentially a guess as to where your low comes in. But across the board, it's close to 92, 91% of the time your low is somewhere lower than this point here from last week. So this makes more sense to me now. To set a more risk on expectation going into the week ahead. And check that out. Yeah, most of your closes around there. Let's go ahead and check out the closes around here. Well, this is saying to skew a bit more higher up or to skew a bit more lower down. And given the odds that we have, I'm going to skew a bit more higher up. So probably retesting 135 on the Canadian. That might be, actually, before we check out oil, because the Canadian dollar's movement has been coming from a lot of oil strength, we have to check out the dollar yen. Okay. Let's go ahead and bring up the seasonal odds. Wow, that is bullish next week. That is bullish. Yeesh. All right, let's check out the low odds. Do most of the lows come in around here? Yes, they do. Most of your lows come in above S1 next week. And how about the high odd here? Yeah, most of your highs come in up here. So probably something more sticky, and we end up trading in the mid 152 area next week. The Ministry of Finance in Japan is really going to like that. Wonder if they'll do their intervention next week if this ends up being the case. Look at those closing odds again, real quick. Yep. And yep. And yep. All right, that'll be the nominal expectation for the week ahead. Now we'll go ahead and check out the commodities. And again, oil just ripping away. So, is this momentum to fade, or I don't think right now this is a good momentum play to fade. Let's go ahead and check out our high odds seasonally for the last 21 years of data. And most of the time, your high is coming in around here, but we moved so much. Getting your high up here, it becomes essentially a guess as to where the high actually ends up coming in at. This is where the continuous data can come in handy. So roughly to around up here, the probability weighted pivot. So call it mid 84 range here on oil. Essentially this same spot up here, but now less extreme going into next week's ranges. Relatively less extreme. Now let's check out the closing odds. Essentially it's sideways to down. Go ahead and check out our distribution. Yeah, and that's where most of the closes end up, anyways, for any given week about the seasonal data. So that'll be the nominal expectation for oil, essentially reaching past the 84 handle. That'd be particularly good for the Canadian dollar. Let's go ahead and check out gold now. Gold has a lot of closes around this spot here. So we probably will see the continuation higher up. A lot of highs next week around here. So maybe you end up kissing 2300 or just below that. And real quick, let's go ahead and check out our closing odds. Yep, most of the closes are right there. Bring up our closing seasonal odds. And you got a chunk of your closes right around there. And then there's possibility for a more significant pullback for whatever reason if that does occur. But again, most of the closes are right around here. Let's check how our seasonal high and non-seasonal high odds line up. Fairly all right. We can kind of split hairs and say this R3 pivot. Yep, that makes sense to me. Don't forget. Okay. Let's see here. Any other major commodities? Net gas. A lot of highs up here next week. A lot of highs up here next week. So I would not be surprised to see a move higher up here on gas, essentially at or past prior week's high. And you can actually see there's a bump in the ranges distribution. So this shade of gray, you have very, very low odds. This is a more moderate view. You can see the odds increase in this particular area quite a bit. So maybe pull back from that. Essentially just a crack of last week's high. Now let's go ahead and check out our closing odds. Most of the closes, probably from this sort of view, are going to look like that. Check out our closing odds seasonally. And yeah, that lines up very well seasonally. There is risk of closing up here, but $2 nat gas would also be pretty horrific. But I don't see going into the summer why nat gas would suddenly be worth $2 going into next week. So I'm going to go with this more nominal expectation. Silver did pretty well in the last trading day here. It's got some pretty flat odds here, so it's going to be like finding a needle in a haystack where this thing is going to end up closing next week. I mean, you can probably say somewhere in the $25 handle, but that's, this whole space right here. Using the seasonal data, this is essentially saying more sideways-ish. I'd say maybe closer to the top end of this range. So essentially split the difference and say the middle of the 25 range, 25.5. And yeah, you can see, hey, you reach a high up here at $26 and it pulls back like a quarter or 30 cents roughly. Let's go ahead and check out our high data. And yeah, a lot of highs around here. A lot of highs around here. So we have a lot of variability around where the highs you. But all things said and done, the high is probably around 26, and then it pulls back into end of week. Probably Should update that to green for bullish. And then you have copper. Wow, a lot of highs up here. Copper jumps a lot next week on the high end. Wow. Over the last 24 years, yeah. It didn't jump this week, right? Had a more moderate high, but a lot of jumps in copper. A more moderate to bullish close. So I think that is a more reasonable expectation than expecting, a 15, potentially 20-cent jump. Bring up the closing odds. Yeah, that looks good on the bullish side of things. So we'll just go with this closing odd here into copper next week. Commodities seem to have good momentum behind them at the moment. And I would like to bring up iron. But iron only has 8 years of data here, and it's only closing data. So, not the best chart in the world to take a look at, frankly. Yeah, you can see closing data makes it a bit hard to draw the indicators. Yeah. If only we had better data here for iron. Okay. Let's go ahead and check out crypto. Net, we had a bullish expectation from last week, and we still got our bullish expectation, essentially closing around this spot here. Now it's still bullish. I mean, that'll be my expectation going into the week ahead. Crypto is still doing quite well. We have the halving coming up in 2 weeks from now. So at the end of next week, it'll be one more week till the halving. Happy halving, guys. And Litecoin rocketed recently back to these highs around 106, essentially based off being considered a commodity from the CFTC. And this is definitely a higher momentum play. I'm seeing news of people saying like, "Oh, it's going to go to $400. It's going to outperform Bitcoin." I'm like, "Well, right now it is. It's at 13% on the day, but hell, I wouldn't mind owning some Litecoin myself." Of the major assets that have been around for a while in the crypto space, I've always kind of had a fondness for Litecoin after Bitcoin. But you know what? Hopefully the economics of it are good, and it'll be kind of Litecoin's time to shine going forward into the halving. We'll see. The volatility in Litecoin is considerably more with these double-digit percentage moves happening at pretty regular frequency now from the CFTC stuff. You can see Ethereum has not been kind of getting the same love on that front from the CFTC announcements, mostly because Litecoin already had that moment in the spotlight with being, sort of declared a commodity by the CFTC a while ago. Also, there's ETHE. There's the Grayscale ETF already. So Litecoin has a bit more work to do. It needs the next bull cycle to really essentially just piggyback off Bitcoin's momentum to see any more follow through. And now let's go ahead and check out the S&P. Our expectations for the S&P were pretty much in line. We expected down, we got that. Up, we got that. And then closing around here, we got that. So While these targets were definitely not in the margin of error that I'd like, except for this close, the general expectation of down and then up and then a bit more pull back into a close, we did end up getting that. So now into next week, there's kind of one or two stories, either getting your close up here or getting your close somewhere up here. So this would be the more nominal, slightly bearish view. This would be the slightly bullish view. And I would rather, considering the things that we've seen in the FX space being relatively bullish on the US side of things, I'll go ahead and set my expectation to lean on the more bullish expectation here. Again, nominally, most of your closes also are up here for a given week. So there is a considerable drift just to being long the S&P. Let's go ahead and check out the low odds here real quick. A lot of lows around here, so maybe some sort of pullback. Check out our low odds here on the ranges. Oh, gotta do a quick little refresh. Yep, most of the lows around here for the week. Check out our high odds. Update this drawing to red and timestamp that. Probably move it one more bar ahead. And then do something along essentially these lines here with the upwards expectation. Usually somewhere around here. That's where the highs come in. Set that to green. And check out our high odds. Yeah, most of the time the highs come in around here. And that's where most of our highs lie, around here. There is this spot up here, so some movement higher potentially, but most of the highs come in around here. And one quick look at those closing odds one more time so I can reposition this closing odd expectation. Yeah, probably more or less sideways to pull back movement. So that's actually fairly decent expectation. Something along these lines here. And then on the NQ, ooh, that is a lot of variance for the week ahead. A lot of closes here, some closes around here, and then a decent amount of bullish closes around here. So this is not the most friendly look seasonally. So I don't see a particularly great seasonal pattern there on the closing data, so we'll just use this for our net expectation. Okay, this seems a little bit more reasonable. Probably down into these lows around here. We'll go ahead and split the difference. So pullback, probably into a slightly lower low, somewhere around here, essentially. Go ahead and check out our low odds. Yeah, there's probably a bit more room for a stronger pullback, or even for just a slightly moderate pullback, to be frank, a higher low. So either one of these could be on the docket. Given that we have US data coming up, and that's likely to be relatively good, I'd actually would more or less expect this more conservative pullback view. And yeah, check that out. A lot of your highs are clustered way up here. Let's check out our high odds. Yep, that looks pretty straightforward to me. All right, now let's look at our closing odds. Yeah, probably either sideways to slight pullback into the close of the week. And I'll go ahead and call it there. I know most people are enjoying their holiday here, so you guys will have this video to watch over the rest of today when you have some time, and tomorrow and Sunday. The next stream on the channel is going to be the month ahead expectations for March, or for April, rather. March is now over. And we'll see how these expectations line up going into the week ahead. We have, I think, really whiffed last week's expectations a lot. It was sideways, sideways, sideways on a lot of assets, and then on some assets, the momentum just exploded. And it's confused a lot of professional analysts as to what's going on, how are correlations between assets changing. There seems to be some underlying regime shift going on in assets right now in the relationship between different assets. And everyone is just trying to collect enough data or more data to try and have a less variable view of what the possible outcomes going out over effectively the next few weeks, the next couple months could end up looking like. Okay, you guys. I'll go ahead and I'll see you all in the next video. And for everybody else who's in the trading group, I'll see you on Saturday for the Outlook review event. In a bit, you guys.